What's up, everyone? It's Karthik with MoneyVest. Welcome on board. Good morning, And we are seeing the continuation of the sell-off from yesterday. So the markets are indeed lower. Pre-market, we're seeing the Nasdaq 100 down about 60 basis points. We got the S&P 500 down over 0.5%. Nvidia is down another 1%. We've got Tesla giving back on all the gains from yesterday, down almost 1%. We got volatility up over 5.5%, almost 6% right now as it's trading back up to over 23, almost 24 on the VIX, as Bitcoin was also trading at under $90,000 in overnight trading. It got down to $89,258. And of course, Ethereum also sitting just a little bit over $3,000. It was trading at sub 3,000 in overnight trading as well. So hope y'all are doing great, and the sell-off seems to continue as we did break down below the 50 EMA, and we broke a 143-day streak for this market for both the S&P and the Nasdaq, closing below the 50 exponential moving average, which is, like I said in my previous updates and videos, is a pretty big deal. It is a big technical breakdown, and we're going to find out if the markets continue on this lower high, lower low pattern, or if the buyers are once again going to step in to give us a little bit of relief. We got Nvidia earnings coming out tomorrow. Got unemployment on Thursday. We got inflation on Friday. So the next 3 days are going to be absolutely packed with data that's going to be very, very important for the market. So it is quite literally Nvidia trying to save this market with its earnings. So if the audio in the video is good, just give me a thumbs up. Just want to make sure there are no technical issues here, and we'll come back to the market updates. Do you think Bitcoin will bounce back from here, Saloni? So we are at a support. So, we discussed the possibility of getting down to 90,000 yesterday, and we got down to 89,250s, and this is a pretty decent support. We are incredibly oversold. So yes, my expectations are to see a bit of a bounce. We're already starting to see that. As Bitcoin has recovered a little bit over 2.5%. So yes, there is a possibility for a nice bounce, but you just never know, right, in this market. Marching on together. Hello. Portfolio bleeding nonstop. Akash makes two of us, pretty much makes all of us, right? For most long-term investors, traders, this is one of those times, again, as we are seeing the markets sell off here. We already covered, Saloni, your question. Good morning. I'm up early at 5:46 a.m. in California, Amy. Good morning. Saloni, just please stop spamming. We've already gone over that. How's the Bugatti? I'm going to probably hold that off for now, especially with the sell-off that we're seeing right now. Volatility is going to be the main focus, as well as the MoneyVest index. So we're at 2.99. As soon as the markets open, we're most likely going to be in the low 2.9s for the Nasdaq 100, and it's possible that the S&P 500 actually ticks below neutral levels, and we are most likely going to be in uncertainty for the S&P 500 as well. So I think both of them are going to be in a state of uncertainty. Below 3, a level that we haven't seen since April 30th. May 1st was the last day the S&P 500 and the Nasdaq were trading above the 50 EMA, and was also the last day that we were trading in neutral. So again, you come over to May 1st, we were uncertainty. May 2nd was neutral for the S&P 500, and for the Nasdaq, you'll notice May 1st was the last day we were trading above 3. Prior to that, April 30th was indeed uncertainty for this market. So that's where we are. Can you mention the PEs? Yes. So if you come over to the dashboard that we have on our MoneyVest platform, you'll have a much better idea on the aggregate price to earnings multiple of the entire S&P 500. So that's going to be sitting at just over 25.5. So we are at a forward PE multiple of 25.5. The concentrations have come down for the entire Magnificent 7 as well as the top 10 stocks here. And if you scroll down, these are the streaks that are now reset back to 0. We're still trading above the 100 simple moving average. So if I were to just update the S&P 500's moving average to, just bring you guys the 100, SMA. So we're just going to plug in this number, remove that one, and we are still above that number, obviously. And that's going to be sitting roughly at 65.30s, and that's aligned with this support level right here at 65.50. If that also gets taken out, then yes, we could be on a bigger sell-off, because the last time we broke down that support of the 100 SMA was back in February 2025, earlier this year. And then, of course, we saw another 18% sell-off for the entire market. And then prior to that, we were looking at around August 2024, but we were already on a pretty decent correction of 10%. And then before that, we were looking at around September 2023. And from the all-time high down to where we ended up, also another correction for the S&P. So if that level gets taken out, which is the 100 simple moving average, then a correction is very probable. Then I could see the S&P trade down to 6,200 if the 100 SMA gets broken down as well. So those are going to be some levels to watch, because we're already starting to break down below the 50. If the 100 also gets broken, then a 10% correction is very possible for the market. So that's where we are on the 100 SMA. And the P multiple, of course, sitting at just over 25.5. So the three things, Stanley, that we are going to be watching for is NVIDIA earnings tomorrow, unemployment on Thursday, and inflation on Friday. So those are the three things that we need to watch for the next 3 days. That, of course, is going to be very, very important for the entire market. Thoughts on iron? We can take a look at it very quickly. I'm going to break down a lot of stocks, but iron here is also showing signs of weakness, as are many stocks in this market right now. So we are seeing a little bit of a horizontal high and then a bit of a lower low forming for iron. So it is this weakness in the overall chart, resistance right about there at $49.50 and a support level at $39 to $40. It is indeed oversold right now on the RSI and the MACD right now. Okay, are we still waiting with cash, or are we light buy now? So Rakesh, the 5 metrics that we look at is the market breadth, the money vest index, which encompasses a lot of other technical indicators. So ideally, if you want to just look at the money vest index, that's also very, very high hit rate, very high success rate, and a win rate of over 99%. So ideally, we are already in light buys for the market, but I would certainly recommend pacing yourself and not going all in, because the overall market structure did break yesterday. We got down to uncertainty. The markets broke below the 50 EMA. We're getting those early signs of a lower high, because if you come back to the S&P 500, and let me just go over to a brand new chart so that it becomes incredibly clear. I'm just going to remove for all of this, all the technicals. And then if you just look at the daily chart, what you're noticing is a bit of a lower high, right? So we got rejected here at 68.66, which was lower than the all-time high right there. So that is already a sign of weakness. So if I were to simply just plot a line right there, that is already showing signs of a lower high. What's happened in the past, as you can clearly see the overall trend, right? That's what really matters for us, for the market, for the overall charts. What we have witnessed in the past is this uptrend, right, of higher highs and higher lows. So markets are consistently pushing higher within that uptrend. So every time we go up, we are going higher than we did the previous time. So this high is greater than this previous one. This high is higher than the previous one. This high higher than the previous one. And this high is higher than the previous one. This was the all-time high. But this was the first time you actually witnessed an actual lower high. Now, are we going to see a lower low? That is the main question. And that's what I mentioned in yesterday's video, because if we take down this support right here, then that would be a pretty solid lower low for the market. That's going to be a lower low, and that is the potential downtrend channel, which obviously is a break of structure. And so nobody really knows what's going to be the end game here. Are we going to see a correction? Are we going to see some dip buyers stepping in? So we're down 4.5% from all-time highs, which is a good starting point. So, we're down about 4%, even if you consider the pre-market move, which is a decent number. But we know, people who've been investing, all of us, our community, we've been in the markets for a long time. You understand that this is only the tip of the iceberg. Things can get much worse if they needed to. So pace yourself. This is certainly a light buy territory where volatility can certainly get up to 28, 29, 30 or higher. I mean, we've seen worse levels. We've seen volatility get up to over 60. These are the all-in levels. These are the levels where you go very aggressive with your investment and, your dollar cost averaging and just the amount of money that you're deploying into the market. So if I were to really put down some levels, aggressive buying, a little bit of heavier buying, and right now we're somewhat light buying. That's really where we are, But by no means it's like a level where you want to just go all in and go crazy. We're turning up the dial, but we're not all the way out there. Can we talk about sector rotation to protect our portfolios from risky stock sectors? What would you recommend? So Jeff, great question. The reason I don't like any kind of tactical rotations is because then you get into this whole idea of trying to time the market. And that there's nothing wrong with that. It's just you're going to have to constantly be very, very tactical in rotating in and out of sectors, which I personally am not a huge fan of. I like to invest in long-term, high-quality companies. Even if they do come with volatility, the price that you're paying for the future returns is volatility, right? Is indeed the risk that you're taking on for investing in growth stocks because they come with volatility. NVIDIA is, as great as it is with incredible amount of returns, not because it's a, fantastic business, because it is, like it's an amazing business, but also it's got a lot of volatility, right? So people who are holding on to, those high beta, high volatile stocks that have lived through those moments are the ones compounding gains over many, many years and many decades. So yes, we can spend a lot of time being tactical and rotating in and out of sectors if you feel that, okay, this is getting overheated and starting to rotate into something else. But that starts to become a lot more like trying to time the market. And nobody really knows, when the right exits and the entries are. So for me, it's a better game to look at high quality businesses, companies that I really want to invest in long term. And the volatility is the price that I'm paying for the compounded growth over the long term. And I'm okay with that. So that's the risk that I'm willing to take. Did you get the taxi Lexus? So some, no. I'm kind of in a dilemma right now, to be very honest with you guys. So I am in the middle of looking at something that I want to buy, for my own car. And I feel like Audi is out of the question, and so is Mercedes. I am really in a flux between BYD, to be very honest. I'm very intrigued by this idea. And if anybody's driving a BYD, just let me know what your experience has been. And then also a BMW. So I'm kind of in the middle of those two. Been comparing specs, performance, ongoing cost, everything, to try to really figure out which is going to be a better decision. Well, I guess I'm happy with both of them because I've test driven both, and they both are really powerful machines. But I'm just trying to figure out which way should I be leaning. Not a Tesla. So Tesla doesn't have very great offers here in the UAE, unfortunately. I mean, they've got decent offers, but the other car companies are insane with their offers, right? So the amount of service and everything included, like the whole overall package that you're getting for 3 to 5 years is incredible. It has to start with V. Yeah, I mean, I've test driven a lot of cars over the last couple days, and I've got my whole spreadsheet. As you guys know, I like to work with data. So I've got spreadsheets with all the different brands, different models, and then all the different specs and performance. You don't want to see that spreadsheet. It's getting a little too crazy at this point, and I'm like, man, I just need to pick something and be done with this because I can't do this. So yeah, if anybody is, driving BYD, love to hear your experience, or even BMW, would love to hear your experience as well. Okay, so coming back to stocks, we covered, Jeff, your question. So we already talked about that. Looking like Meta light buy will hit any minute now. Yes, 590 is the Meta light buy, and we're right now sitting at 592. So yes, we are very close to getting down to that light buy for Meta. And I would add a few more shares. Might even add today. Just some shares, given that how oversold it is, and I do believe that it's a good value for money. Meta platforms. Okay, let's come down. CoreWeave, can you explain the overall company fundamentals of Robinhood? It's a great company, but it is overvalued. So, Raul, I think Robinhood is a fantastic business, but yes, you're right. It is an not not really overvalued, but I should say it's trading at a very substantial premium to where the fair value is. I guess it's a nicer way of saying that it's overvalued. But if you come over to these statistics, we're looking at 50 times earnings, 26 times sales. So that is a very, very expensive stock to own. And so support level for Robinhood's going to stay up at $93, $94. And we've also got this as part of our shopping list. We had the light buy, heavy buys in the 30s and 40s. Back in April, it was literally trading at those prices. And since then, it has more than quadrupled. So it's been crazy. Are you looking to take electric car or gas? That's also part of the dilemma because, I can go on and on as to what the dilemma is because BYD, the only drawback is the range. It's got a really low range as an electric vehicle, only 460 kilometers. And so I'm like, okay. And the charging network is also limited. It's going to take at least 30 to 45 minutes to get from 0 to 80% charge. And so that is also what I'm weighing in, with the resale value, which may not be as great because in 5 years, the technology is going to have moved up so much that all electric vehicles of today might even be obsolete. So I'm kind of in a flux here. Do you think that once the Fed starts cutting rates next year, things will be back up and this is a good opportunity to buy in the dip and correction? So, the Federal Reserve's rate cut is actually uncertain, right? That's one of the reasons why the markets are also selling off is because the lack of data is causing the Federal Reserve, the market really to price in for a rate pause. And the Federal Reserve is essentially flying blind right now because we don't have any data to work with. And so that's one of the reasons why the markets are selling off. The other couple of reasons are profit taking, institutional investors taking risk off the table. They are indeed realizing, gains. I've showed you guys with the 13F filing, that we saw with the SEC 13Fs. A lot of institutional investors have been exiting out of Tesla, Palantir, Nvidia, Iron. So many companies that have ran up and had such incredible years up until Q3 are the ones being sold off, right? We've seen a significant 30 to 40% reduction in filings for these names, including Robinhood, including SoFi. And so it's very evident, right? It's very clear that big money has been exiting out of this market in capturing those gains, right? They want to realize that profit, so they're ringing the register. And so when they're going to re-enter back in is probably going to be at cheaper prices, lower prices, and that's where we as retail investors can benefit from that because we don't have the clock over our head, right? We don't have anybody's pressure. We can just continue to, trust the process, stay in our lane, and continue to invest. Vault, so which BMW? So it's come down to X4 or a C-Line 7. Those are the two that I'm really kind of in a dilemma with between those two. So it's between an X4 and a C-Line 7 is basically what I'm trying to decide right now. BMW UAE pro tip, buy in Abu Dhabi, much better service, longer warranty, up to 7 years. Wow, okay, that's a good tip. Don't get that in Dubai dealership. That's good to know. Thank you so much. Really appreciate that. Get yourself a Jeep and call it a day. BYD for an old man. Well, it's a brand new car. I mean, it's got a lot of tech. Performance has been incredible. 560 something horsepower and insane acceleration, torque. I mean, you've got crazy performance. But there is one thing. I mean, you've got, as soon as you take it up to over 120, then it starts really, it's a little bit rough on the edges as you kind of turn around the corners. And so it's not as stable as a BMW. So that's where the performance really kicks in because, of course, German cars have been around for decades, whereas Chinese EV is just brand new. So those are things that they are trying to fix for sure. Mahindra Thar. Okay, so let's come back to some stocks questions, guys. Okay, let's come back to the market. Like I said, we will talk definitely here and there about some of the things. I know this is a very interesting topic. We can go on and on about different cars and specs and whatnot. But I'll definitely read a lot of those comments. If you definitely do share your opinions, I'll come back and read those comments. My mind is saying BYD, but my heart's saying BMW for some reason. Okay. Live test drive. I've actually done that for Tesla. Tesla Model 3, I did that. I posted a video. In May, we expect a new Fed chair. Yes, a new Fed chair is going to be coming on after May. Jerome Powell's term is going to be ending, and they're already interviewing new candidates. I think it's going to really come down to a few people. Right now, there's like 3 candidates, which I don't think it's a public list of who they're interviewing. But yes, May, we're going to most likely get a new Federal Reserve chairman. Is Meta ready for light buys as per shopping list, Srinivas? Yeah, so we covered that earlier. And then Meta is going to be 590. Jonas, let your girlfriend decide that it'll be the BMW. For her, it's mostly about what looks good. That's it. None of the performance metrics matter. It's all a snooze fest. As soon as I start talking about performance and cost and value, it's all whatever looks good. Outside and inside, that's all that matters. So, doesn't help me much, to be honest. Okay, so CoreWeave. Let's take a look at CoreWeave. So one thing I do want to mention about a lot of these stocks that were the AI hype and they were pushing higher are the ones that are seeing a big sell-off, right? So if you come over to this watch list, CoreWeave from its highs of 148 is down over 50%, so it's been cut in half. BMNR was one of the hottest names up until a few weeks ago. I know Tom Lee's been talking about this. BMNR like nonstop, down 50% on the back of Ethereum sell-off. Then we got DLO, so D-Local, down a little bit over 25-30%. You got Archer Aviation, incredible amounts of sell-off here, 50%. I mean, a lot of these stocks are just getting cut in half. BITX on the back of Bitcoin as well, from 66 down over 50% also. Navitas. So a lot of these hot momentum watch list stocks are high beta, very volatile, and incredibly risky. So only trade and invest with a proper risk management, with a proper stop loss in place, and then also with the full idea that, okay, this is what I'm going to invest, which I can afford to lose or afford to be down like 40-50% on these because they are incredibly risky. These are not your core portfolio stocks. Absolutely not. These are not stocks you want to be anything over 20-30% unless you can bear the risk and you can weather through the volatility, because as I said, they can be very, very risky names, right? They're incredibly volatile. So for CoreWeave, I would put down a support next down at $64-$65 with a resistance up to as much as $85. So that is going to be that level to watch. You should only get a Tesla. You've invested in Tesla, so it'll help the stock prices going up. Well, I doubt my one single purchase is going to make any difference. But yeah, no, I was definitely considering Tesla. I do want like not a sedan. I don't want like a big SUV either. I want a coupe, like a, something that's like a crossover. And Tesla unfortunately doesn't have that, right? You're either like getting the Model 3 or the Model Y, right? There's no like a crossover, model that you're able to get. And the new Model Y, I love the efficiency, love the technology. Of course, as a Tesla investor, I love the overall value for money that you're getting. The technology and the software is unmatchable. The design though, the design also does matter, which is okay for the new Model Y refresh. So on the fence with where Tesla is with the Model Y, and of course what my personal demands and needs are. So yeah, so I'm not looking at sedans or M3s or the M series. Like, I'm not going for any of the sedans or the lower end, like the lower gravity, like I'm looking for at least a crossover, a coupe or a higher. So yeah, Best Buy area on Trade Desk, we'll talk about that. And let's take a look at MicroStrategy as well. So MicroStrategy and Trade Desk. Let's talk about that. MSTR. So here we go. MicroStrategy continues to plummet on the back of Bitcoin. No surprises. As Bitcoin here down to low 90s. We are down a little bit over 29, almost 30% from all-time highs for Bitcoin. And as a result, MicroStrategy, similar to BMNR, similar to a lot of crypto stocks, crypto mining stocks, crypto ETFs, continues to sell off as well. With any crypto-related ETF or stock that you're looking at, as I said before, it's all going to come down to the analysis on crypto, Bitcoin and Ethereum. because that's what they're trading off of. MicroStrategy is going to be trading off of Bitcoin. BMNR is trading off of Ethereum. BITX is trading off of Bitcoin. So that's really what we have to analyze. And for Bitcoin, as I said, if I do expect some kind of recovery from the low 90s, there's possibility that MicroStrategy also does potentially recover, and a resistance is going to be all the way up to $232. So that's going to be that level to watch for MicroStrategy. Porsche looks very good, and if you're looking for performance, you will get plenty of it in Macan as GTS Turbo. Porsche, and I would say, like, because I read different reviews and stories, and they mentioned that the servicing can be very, very expensive over the long term, and they only allow you to buy through authorized Porsche dealers for parts. And if you go outside of that, then you essentially violate the service agreement, and none of that will be covered in warranty anymore. Just what I've learned is this going to be very expensive over the long term to service the vehicle. And as frugal as I am, I want something that's not going to cost me money, because we talk about investing in assets all the time on this channel. And so right now we're talking about a very big liability, unfortunately. So could you write, please, your thoughts on Tesla? Tesla in terms of what, Mihail? The company overall, where I'm at with the technical analysis, fundamental analysis, the stock itself, more than happy to cover that. Let me know what exactly you need my thoughts on. What's your take on if I use my margin to buy the dip till the recovery when I don't have cash? So it's not the worst idea, but try to avoid it if you can. Reason being is because there's margin maintenance, right? So there's always that risk that you might run into a potential margin call, right? And so that becomes a bit of an issue. So to give you a very simple example, if we look at, let's say, $100,000 account, right? And let's say that you end up using $3,000 of margin, right? So right now, that margin is only 3%, right? And let's say that you need to be under 30% margin, for example, which right now 3% is really, really low. It's okay. $3,000 on a $100,000 account is okay margin, right? So on top of that, you'll be paying interest on that margin. But let's say stocks start dropping more. Let's say the market takes a dip, and this portfolio of $100,000 comes down to $95,000, right? So now that 3% is 3.16, okay? Now let's say that the portfolio takes another huge dive. The markets continue to correct. We're now looking at $100,000, right? Slowly and steadily, this number starts creeping up, right? So this is just a very illustrative example. Instead of 3,000, let's say you end up with $10,000 of margin. Now we're at 12.5%, from 10% to 12.5%. And as the portfolio value comes down, right, this number starts to go up, right, as a percentage of your equity. And so that's exactly what we want to avoid, is if stocks come down, your margin as a percentage of your portfolio starts to go up, and that causes a bit of a pressure on the portfolio. So avoid it if you can, because I obviously don't use margin, and I think it's very risky, especially in a market that continues to sell off. The only time I could even potentially see myself using margin is if we are in a state of complete panic. We are literally down here at 1.8, under 2 for the MoneyVest index. Volatility is through the roof at over 70, and I just can't find more cash to buy what I want to buy. So if I'm all out of my cash, I've already deployed everything, we are in panic. Volatility is at over 60, and we see another sell-off, and I'm like, okay, I need to take advantage given how high the volatility is, given how low the MoneyVest index is, how oversold the stocks are. Only then I could see myself dipping into like 5 or 7 or 10% into margin. What most people, or that's how people over leverage themselves, is they buy when they feel like they can't lose. So if you look at the markets in the NASDAQ, S&P 500, when we have been hitting new all-time highs, when it starts to become very easy money, that's when people least need to use margin but end up using it, right? Is at near tops and near all-time highs and near hype. That's when you don't need to use it. You're doing well, but the greed kicks in and you start using more. And then as a result, when the market's correct, that's when the margin maintenance starts to creep up on you. So if you are incredibly oversold, then sure, it can make sense if you are responsible. There's a lot of tools out there. A lot of people say, oh, credit cards are the worst. They can be incredible tools for building credit, for getting cashbacks, if used responsibly, right? So this is kind of like an important lesson, is that everything in balance can be very good. Anything in either extreme can be detrimental. Either actually detrimental or can be the lack of opportunities or growth. So everything in good balance and good discipline can be very lucrative. I remember a story, I forgot the exact name of who bought this, but I was watching this very quick video where this person purchased an entire building of $60+ million, $65 million, literally using their credit card, American Express, and they get a 1% cash back on it. So you're technically getting over $650,000 of discount from a deal that's worth over $65 million, literally by swiping the credit card. And had it been an all cash deal, then of course, you're paying the extra $650, but you're able to get that cash back simply by paying. So responsibly, yes. Disciplined, yes. 29.99% interest, correct. It's crazy what that can get up to in terms of interest rates. What will happen to stocks like Hims, Meta, Oscar, Nvidia, Adobe, which are already down 30+% when indices starts to pull back? They're most likely going to see some kind of stabilization and then a further sell-off depending on their on individual companies and their own catalyst. But if the entire market starts to pull back, then there's nothing really that's going to stop other companies from not selling off. If the entire market is, a lot of these individual stocks could potentially drop further. And that's why, when we look at the aggregates, that's also the challenge, is that we look at our portfolio, we look at individual stocks, and we're like, what the heck? Like, these stocks are down 10, 12, 15%. And then we look at the markets, and markets are only down 4%. You just can't connect. You're like, this can't be real. Like, this just doesn't make any sense. How is the market only down 4% when my portfolio is bleeding 15, 20%? Well, because the averages, the aggregates, obviously don't move as aggressively as individual stocks. But when they do move, things can get much worse. And so during times of real distress and real pain, when we've seen the markets go down 15, 20%, 30%, 2022 bear market, literally earlier this year when we had, the markets down over 20%, a lot of individual stocks were down substantially more. If you come over to NVIDIA, this is the April dip from its all-time highs. It was down over 43%, so twice the S&P 500's drop. If you come over to Palantir, for example, that was the April dip from all-time highs of 126. It was down a little bit over 48%. So it was cut in half, right? Literally cut in half. And right now, this is nothing. This is quite literally nothing, right? It's only down 16%. We're only in a small correction. And so I think we also do forget what we have been through. So someone watched your video posted 2-3 days ago in which you showed a table with 2 columns. I think it had something to do with VIX. Any chance you can explain the figures in that table? Are you talking about this table right here? Was it something like this? The volatility table? If it was this, then I'm more than happy to explain. Let me know, and we'll cover that. But if you were referring to the VIX table, then I'm assuming it's that. Any sector seeing growth while tech gets clobbered here? Industrial materials, international. So emerging markets are also not doing super well. Commodities are selling off. Then in terms of individual sectors, markets have been rotating back and forth a little bit. So if you come over to market concentration, you will find investors kind of hiding out in utilities a little bit. Utilities also a bit of a risk-off, recession-proof sector. So it was up over 1%. And then communication services, thanks to Google really, which was holding up the market a little bit. So if you kind of exclude for Google, then this sector would have been flat. So it's really utilities. Healthcare has really taken off recently because, you look at the performance of Eli Lilly, Johnson & Johnson, I mean, they've really come up because they didn't have a very strong start to the year, but this sector has just taken off since August, September, right? I mean, this thing is up substantially. From 619, it's up 70%. And then if you look at Johnson & Johnson, just take a look at that. New all-time highs, right? Since June, this stock's been on fire. So healthcare, again, it did not have the best of starts, but healthcare, utilities are really the places where a lot of investors are now rotating into. So if you are looking at some tactical rotation ideas, these are sectors where investors are. But as I've said before, tactical rotations are very difficult to time. By the time it's like, okay, technology is selling off now, it's actually time to be buying tech, not selling tech, because we're already down quite a bit. So keep that in mind. So, okay, if this is the table, this is essentially showing us the last 31 years worth of data on volatility. And what this shows us is the different VIX value. So this right here is the different values of volatility, aka the VIX. And the higher it goes, the higher we are on a percentile basis. So you'll notice that right now, as it stands, we're at 23.7. So that's the value of the VIX. We're at 77 percentile. Ideally, this number, as soon as it crosses over 29, we're in the 90th percentile. That's the cue for me to start dollar cost averaging and start to be a lot more aggressive. And over here, you'll also find days spent above 20, 30, 40, 50, so on and so forth. And as you can imagine, the higher we go, the fewer number of days spent at those levels. So, which is also why I always mention anything over 60 is for me to close my eyes and start buying. Only 39, 40 days. That's it. That's in the last 31 years worth of history. Volatility has only been over 60, 38% of the time, 38 days, right? So that's less than 1% of the times. So we've done live streams where volatility was at over 60 and we were part of history, if you were to consider it that way, because we've only had 38 days in the last 31 plus years. And if you were live to witness volatility at over 60, you are part of history. You witness something that less than 1% of times it's happened. Quite interesting. It's a little bit nerdy, but I like to be part of history. Our volatility is over 60 and we can see it live. Okay. I also have a Google short. Everyone sell Google, thanks. Well, Berkshire Hathaway just picked up a lot of Google, so that's one of the reasons why I was pushing higher. I have 160 shares at $13, so I can just DCA up if it goes down. That's great. ANET, what's your view? So Arista Network, I like that stock. I like that company very much. I've covered that on the channel quite a few times. It's been selling off a little bit after getting very, very overbought. And so starting to break down below that support, I would put down the next target roughly around 120. So $120 is going to be that support level to watch for Arista Network. Okay, SoFi. Let's take a look at SoFi. Where are we trading for SoFi here? Down about 2.4, trading back down to 26. If it trades back below 25, I would be very excited, to be honest, because my covered calls will be back out of the money. And we've got a very strong support down here inside this green rectangle at around $24, $25. So those right there are going to be some levels to watch for SoFi. Yeah, still a bit confused over those percentiles. I mean, this is, just simple percentile calculations that we have done. And so, what this essentially means is, if you're at the 90th percentile, so 90% of the values are below that number. And so that tells you how rare that number is. So, for example, if it gets up to over 81, right, that means 99.99% of the values have all been below 81. Only 0.01% of the times we've actually been over 81. So that tells you how rare, how extremely rare that event is for the markets to happen. So you can see right there also days above 80, only 3 times, 0.04%. This is just a different way to put it. And so what we're trying to capture is the rarity of that event. Because the market is mostly trending upwards, right? We start to see a very strong inclination towards an uptrend for the market, because even in market thresholds, you'll understand that, okay, we're 75% of the times we're well within 30% of all-time highs. So that's a very strong statistics telling us that most days, we're going to be trading at near all-time highs. Not at all-time highs, but very close to the all-time highs. So the moments that we're not, people got to be taking advantage, right? When the VIX is high, we don't see that very often. And when we do, that's the opportunity. So this is just a table showing you the rarity of an event that's happening. BMNR has put a crater in my portfolio. Have you looked at it yet? So yes, Ethereum is the main culprit. Of course, on BMNR and a lot of these crypto stocks, a straight decline from 64 to 30, over 50% sell off, absolutely insane. And look, Tom Lee's behind it. He will come on CNBC. He will talk a bullish tape, which is totally fine. But that's exactly where statistics come in. Objectively speaking, we've talked about this many times over, is if I come here and I tell you the market's going to go up tomorrow every single day for the next 252 trading days, statistically speaking, how many days am I going to be right? Does anybody know the answer to that question? If I come here on YouTube and I tell you every single day the market's going to be higher, market's going to be going up, how many days in a year? There's 252 trading days, Monday through Friday. How many days do you think I'm going to be right? Statistically, not realistically, but statistically, how many days do you think I'm going to be right? 75%. That's about 185 days. So, but the 25% of the times when I'm wrong, I'm going to be really wrong. So that's why I don't want to predict. That's why I don't like to predict. And we always got to have an objective opinion on the market. Look, I'm at heart a very strong bull, right? Nothing makes me more happy that everybody makes money, markets go up, and we all celebrate. We have good wins, we have good profits, we have good gains. But I also don't want to be blinded by my bullishness or my desire for the markets to be higher to just only talk a bullish tape. That's why, yes, I do get a little bit of pushback if I say, oh, markets could correct, markets can go down. That's why I have to put those disclaimers. I don't want to be a party pooper. I don't want to be the Debbie Downer. I don't want to, just ruin this party that we're seeing. But it's just coming from a place of objectivity. Is that okay? I don't like the way things are right now. The risk reward is not great. Just be careful. That's all it is. So I will always tell you exactly how I see the markets, not what you want to hear. Because what you want to hear may not be how I view the markets at the moment. Okay, trade desk, I will take a look at trademark. And yes, okay, folks, please don't spam the chat. I'll definitely go over your questions if I can see them, but please do not keep commenting a ticker. Let's look at trade desk here. Support level is going to be $39.40. It's been obviously on a significant downtrend, a couple earnings, gap downs. And that support, if that gets broken, then we're looking at a support all the way down here at close to $30, $31. And right now that support is $39 for trade desk. Seems like you're not a big fan of AMD, right? Can't really understand why as an AMD user and investor for years. I love AMD. I absolutely love AMD. In fact, AMD was my first love before NVIDIA. But AMD then also became extremely overvalued, relative to its fundamentals. And then I've traded AMD a lot in the past. Go back a couple of years, all I was talking about is AMD over NVIDIA. I was a huge fan. Still am to this day. But of course, the valuation is a little up there relative to the revenues and what the company is able to generate. It is trading at over 15 times sales, which I think for AMD is pretty expensive. And even if you look at the profitability, we're looking at $1.64 billion in net profit, or net income with a valuation of almost $400 billion. So that's a pretty substantial PE multiple, right? So I love AMD, but the valuation, again, coming back to the objectivity of the analysis, is that as much as I like the company, you can love the company and still not invest in it, right? Because of the valuation and the risk reward profile. So Anyway, so Tesla technicals, please, and put a call ratio. Let's just quickly go over to Tesla very quickly. So coming over to the daily chart, we are getting validated at the 100 SMA, pushing right back above that support of 400. That's going to be that area of demand and resistance all the way up to 460s. We were seeing a lot of consolidation. Eventually, the support gave out, and now we're starting to see some more potential downside there. So markets are open, guys. Everybody, again, thank you so much for joining. And here we are. QQQs are down over 80 basis points. We got the S&P 500 down over 60. Tesla's down over 80 basis points. Nvidia is down another 2%. Volatility is officially up at the high of day at 23.9 and pushing 24, 7% higher as Bitcoin trades just over 91,000 and markets also selling off further. Coming over to the MoneyVest Index, I think it's going to take some time to update, but as soon as it does, I will update the values in our Discord. Thank you so much for joining, everyone. Really appreciate you all. Again, link's going to be down below if you're interested in joining our Discord and our community for very lively therapy sessions and engagement in our community, because I know it's not just you that's hurting, it's everybody. The entire market selling off affects everyone. So if you want a community where you can talk to other people about how incredible today was, or yesterday was, or last week was, we're always here to support. Link's going to be down below. 40% annual discount. As always, happy investing. Any questions, email me at admin@moneyvest.com. I'll see you guys tomorrow morning for another live stream. Don't forget, NVIDIA earnings tomorrow, unemployment Thursday.